I think we've talked a lot about ecosystems, and I think if one term is very closely connected to ecosystem, of course, we have to talk about platforms. And the platform economy has probably one of the biggest trends within the last years and has changed so many traditional business models, not only, but also in the financial industry. In the past, the incumbents usually almost owned the whole value chain. But what are we observing today? This value chain is breaking up, and mostly specialized startups try to grab one certain part of this value chain. And in the next panel, I would like to discuss the success factors of cooperation, the importance of network effects, and probably, it's the most important part, the expectations of the end consumer in the platform business. So I'm really looking forward to welcome 4 experts from the banking as well as from the insurance industry. I would like to introduce you to Wilby Vene, she's CEO of Modular Bank, to Christian Macht, he's CEO of Element Insurance, to Lorenz Gräf, he's CEO and co-founder of Besurance, and last but not least, Malte Dummel, COO and CFO of Xempus. I've already used the picture of the value chain, and I would like to get started with you, Wilby, to get to know you a little bit better and also to get to know some more insights about Modular Bank. What part of the value chain is Modular Bank trying to grab now and maybe also in the future? I can't hear you by now, Wilby.
You're muted.
Sorry.
That's the typical mistake, no problem.
I'm really pleased to be here today. I'm coming from Estonia, from Tallinn, tiny country. And I'm CEO and co-founder of Modular Bank. We started Modular Bank a little more than 2 years ago. Me personally, I have been building banking infrastructure whole my life. And what we do in Modular Bank, of course, we provide core banking infrastructure. That means technology, on top of which every company actually can build their financial services. And talking about value chain, if we are talking about banking, then we are in the very heart of the value chain. Because what we provide all very, very centric banking services. We support them as transactional banking, accounts, deposits, lending, payment cards, etc. But we don't offer services only for banks. Our customers are also from other industries. That's probably very important trend nowadays on the market that we call embedded finance. And what we do, we enable all industries, starting from retailers, wholesalers, telemedicine, energy companies, to embed financial services to their offerings. And it means that we are in the enabler in the value chain.
Cool. Thank you very much. I think that was a very good overview. So you are really concentrating on the back end and cool.
Yeah.
Thank you very much. Maybe we go on with Christian. I know that Element owns its own insurance license, but maybe you tell everyone else a little bit more about Element and maybe also 1 or 2 sentences about you.
Yeah, Fabian, first of all, thanks for having me or us as Element. My name is Christian, CEO of Element, not originally from the insurance industry, but now proudly arrived where I belong to, and that's the insurance industry. And you asked for the part of the value chain, and we just heard about Modular Bank. Insurance is a slightly different, but I try to put an analogy to it. We are, from at least what I understood, similar to Modular Bank, but for the insurance world. So we provide services, being it for platforms out there that have end customer access, being it for distributors, so classical distributors of insurances, being it brokers or MGAs, but also for insurers, so companies that have their own license but perhaps have a capacity constraint to develop new products and bring them to the market. And in order to do that, we also own an insurer carrier license. So we underwrite our own products.
Cool, thank you. So it's a typical B2B2X approach, I would say. Yeah, cool.
Sometimes a few more B's even.
Yeah. Okay, maybe we can have a closer look later on that. Let me come to Lawrence. You're CEO of Besurance, an Austrian insurtech, and maybe you can tell our participants a little bit more about Besurance.
Okay, so many thanks for inviting us. It's really a pleasure to speak here. As I'm already raised, my name is Lawrence. I'm a serial entrepreneur, so I'm also not used to the insurance environment. I'm doing this with the company called Besurance since 3.5 years. Before I had kind of different startups, and I worked my whole life in the digitalization area across industry. And therefore, finally, I found let's say, a scalable business model, which we try to get into the market with Besurance. So what we're doing more or less is delivering embedded omni-channel insurance solutions in a B2B2C model.
Cool, thank you.
When we're looking on the role, what we're playing, I can 100% agree with Modular Bank. We feel ourselves as enabler, but we feel ourselves as enabler in two directions. So first of all, for platform operators, so companies or product companies or whatever kind of company who want to build a platform or already has ramped up a platform, but also for insurance carriers to give them the opportunity to distribute their insurance products in these platforms.
Cool. So when listening to you, yeah, I'm quite sure that embedded insurance or embedded finance really has to be the trend of 2021. Maybe we can have a better focus on that later on. But let me come to Malte. You're from Xempus. That's the new name of the company. You're probably better known with the name XBRV. Maybe you tell us a little bit more about you and the company, and maybe also why you changed the name.
Oh, well, thank you. And thanks a lot for having us. I'm Malte. I'm a reformed investment banker. So after a decade in banking, I decided to turn my life around and join this company called Xempus about 3 years ago. And what attracted me to this opportunity were really three things. The first is life insurance or pension and life insurance, which is the core of what we do, is one of those areas that I'm sure my colleagues here on the panel can attest to is probably quite a lot behind when it comes to digitization. But it's a huge market, and it's a market that's desperately in need of digital solutions. And I believe here at Xempus, we found a way of doing that. So we essentially connect about 16,000 insurance brokers at the moment to around 30 life insurers and 50,000 SME corporates to help them buy and manage these pension and life insurance brokers. So we are, in essence, a mixture of a pure tech enabler. So we make life easier for the corporates, for the brokers, for the life insurers, because they can talk to each other in a digital manner, and they can do so much more efficiently. But we're also a bit of a marketplace. A lot of the brokers, they generate activity via our platform, and we help connect them with the product providers and the corporate. So really, it's two roles we're playing, and we'd like to think, and I'm sure we'll get onto this later, that creates some quite neat network effects for everybody who happens to be on that platform. And the name change, to just finish off on that, BAV, for those of you who are not deeply familiar with, is just an abbreviation for parts of the German pension offering, Germany being a home market. And by now we do a lot more than just the initial product, and people can't pronounce it. And those two reasons really brought about the name change.
Yeah, that's a very good explanation. Thank you. And so I would say that everyone seems to be an enabler. So I would like to talk a little bit more about success factors of corporations. So you all cooperate with incumbents. They can come from the banking industry, from the insurance industry, but also that can also be non-financial players. And maybe looking at you, Christian, like you cooperate, for example, with OEMs such as Volkswagen, but also with telcos such as Vodafone. What are the success factors that corporations are really working at the end?
Patience. No, I think you need an understanding of how I think corporations work, but also what is their business model? What do they want to achieve? That's not always what you think is the upsell and the P&L impact. There might also be conversion of certain products, test cases for certain areas. And I think that is quite important. And then what we have built for that is we call it an onboarding team, people who are dedicated on that interaction with partners. Also, not only from us on their side that they are complicated, we are also complicated. We also have, even, if you talk about naming and rules and procedures, we are a regulated insurance company. So you need people at the end that talk with people on the other side and make things happen. And that takes time to find these people, to educate the people, not on their smartness that you hopefully have when you find them, but on the specifics of the industry, of the specifics of your company and the specifics of the industries they then work in. And that's what we do. And that's, I think, the core for success with partners. Actually, also when you have RFPs and everything, you need a team to respond to these.
Cool. So at the end, it's all about the people, and you don't play the blame game. Let me come to you, Wilby. You said at the beginning that you're cooperating with banks, of course, but also with companies from the energy sector and so on. Maybe you share some insights with us. What have you underestimated, like when starting Modular Bank, and of course, you had an idea about your business model, and you said, okay, I would like to cooperate with rather traditional players. So what have you underestimated?
Yeah, before we started Modular Bank, me and I and my business partners, we had long history working with banks and other financial institutions and pretty incumbent institutions, but we still underestimated the sales cycles. And when we started, we were thinking that incumbents, that's long cycle, but it's even longer. It can take 2 years really to onboard the customer, and because organizations are it's very often that if you want to digitalize something or bring something new to the little bit older incumbent organization, you have to really to work with different people, different attitudes. You have to really prove that you can deliver, and I think that's the most difficult with incumbents, than to prove that you, as young company, you are coming with different approach. You are coming with modularity and cloud and APIs and you can prove that that really works, and that makes your life easier at the end.
Cool. So I would say you also said it's about the people, but it's also to get a really deep understanding of the other sectors, because you said you had a really good experience with banks. I think that's very, very important, because I think startups often do not really know that you all work in a very regulated environment. And I think that's one point startups sometimes forget. So if we have some startups here in the audience, that's probably one of the most important things you should know. Lawrence, You were smiling when Wilvi was talking about the long sales cycles. I
Yeah.
know that you also have a very different range of customers. Like, what was your experience? Because you founded a speedboat, I would say. So how was it as a speedboat to cooperate with rather conservative industries such as the insurance industry?
The, so the speedboat approach I think is okay. Yeah, so we never had a problem getting entrants, yeah, because we had from beginning also some, let's say, some CVCs on board as investor, which gave us some credibility. Yeah. But what I totally underestimated, yeah, and I'm working cross industry since 25 years, yeah. What I really totally underestimated was how slow deal making in insurance environment is, first of all. Second problem is how regional the business is run. Yeah, because everything is typically across Europe. When you try to find a cover which covers 3 European countries, it takes, I don't know, ages until you find someone who's delivering that. That was really something I didn't see uh, upfront. But getting, and I'm talking to a lot of let's say, also startups who are doing the same, and everybody's telling me the same. It's hard to get the right product, and it's hard to scale over borders. Yeah, and that's one thing. And when you're coming back to the question, what is a successful factor for cooperation? I think in reality, yeah, it's important that you somehow cover all the things which your partner needs. But in reality, I'm a big fan of focusing on the consumer. Yeah, that means if you really produce something which adds value for the consumer, in the end, the partner is coming to you. And Malte, I think your product is a really good example. And personally, I believe Malte is not an enabler. Malte has built a platform, and they're already doing platform business, from my opinion. So adding value to the end consumer will somehow lead to success. And yes, you need to take care about your partners, and have to give them guidance. And we have also a dedicated customer success team now, and we try to give our customers guidance, best practice guides and training, sales training and whatever. Yeah, it's needed that they are successful. But in the end, if you don't add value to the end consumer, you will fail, definitely. Yeah.
Okay, that sounds like a very, very good learning. Malte, you've already mentioned the term network effects before. Maybe you tell us a little bit more about why network effects are so crucial when it comes to platform business, and then we can maybe dig a little bit deeper into network effects and how important they are, and why incumbents, maybe sometimes a little bit too careful when it comes to the platform business. But maybe you start with a short explanation, because maybe not everyone is so familiar with network effects.
Sure. So from our perspective, really, network effects come down to two dynamics. So the first one is the more users we see on our platform, and I assume it's actually very similar for everybody else on the panel, we don't have a crowding effect, right? They don't compete with each other, but they tend to benefit from each other. And in particular, what we think is most crucial, at least in our business model, is different groups benefit from each other. So the life insurers want to be on the platform because there are some 16,000 brokers who write billions of business. And if they're not on the platform, they're just not getting it. The brokers want to be on the platform because there's some 50,000 SMEs who, they can only access to the platform. So I think that's a very important part to it. And actually to the points that I fully agree with that Lawrence and Christian made. So when we started out, a lot of it, what we did when we spoke to the big broker pools or the big insurance company, was really explaining how we made things better for their end customers, so the platform. And everybody gets that. And then sometimes people may get bogged down in internal processes, which is, understandable, but that's sort of the guiding path. And then, as Christian said, it's really around having customer success people who can speak in very different language to different groups of people. And I would like to think that the crucial component, at least for us when we tied back to the network effects was becoming more strategic. We actually found that when we did the first project, and I expect it was similar for you guys, when we kicked off, people would like to do long pilots, and we'd sort of work our way up through the organization. And then hopefully at some point you had sort of proven yourself, and there was a second pilot, it kept going. Since we had reached sort of a more critical stage of different user groups, it's a different conversation. You can actually have conversations more at the C level. And when you say something to the effect of, hey, we have this big pool of brokers on the platform who write 100 million euros worth of new business each week, why don't you join the platform so you can participate? If you don't, you really can't. That all of a sudden generates sometimes the momentum that can help you cut through some of the internal complications, because most of the insurers are set up to really try and win the new business. So the new business part really, for us at least, helped a lot to accelerate and get sales cycles from what used to be 12 months, then 9, 6, down to something like 3 months, which for us is like light speed in the insurance industry.
Yeah, that's true. I think when looking at Lawrence, I know that Besurance also runs a few bancassurance cases. Do you think that the industry is already open for such new products, such modular products, such platform products?
When you compare, so this is my personal opinion, but when you compare banking with insurance, I would say the digitalization is at least 5 years ahead of insurance. And therefore they feel already the pressure. There's a lot of neobanks, and when you're in the age between 20 to 30, I think a lot of the people are using now neobanks and not traditional ones, and therefore they already digitalized, that the touch point is the digital. And what we see here is now a big gap between the banking, and there's always a close cooperation between banking and bank assurance, and there's now a gap between the banking, which is fully digitalized and has a digital touch point, and the insurance environment, which seems still lag behind 5 years, 10 years, whatever. And you can make somehow business out of that. That's one perspective. And the other thing, what I see also in the market, is that the business model on the banking and bank assurance side somehow changes, because up to now this was normally a very tight integration. That means a bank had one insurance carrier as a partner. That was the more or less the relationship. And now we see a lot of different marketplace approaches also, because the banking itself try to be a financial platform, and therefore they want to really solve a consumer problem, and the consumer problem is better solved when you have 3 or 4 carriers on your platform than only one.
Thank you, Lawrence. Yeah, we've already talked about banking, and I would say you are our banking expert in this panel. Yeah. Do you think that the banking industry is already quite open, or do you still think that they are quite restrictive when it comes to platform business?
Yeah. As Lawrence mentioned, there are very, very different players in banking, and of course neobanks, and they have been open from the very beginning. But if we are looking into the little bit deeper into the incumbent banks, then okay, they can look like they are digitalized because they have introduced and worked hardly last years and last 10 years already with introducing new customer channels. But if you look deeper, incumbent banks are still mostly they are relying on very, very old silo-based core banking platforms, and it means that if we are talking about real digitalization, it means that the processes have to run through the organization digitally. And what is the main struggle is that as those very old core banking platforms have usually built over the years, and very often even in-house, to switch to the platform business. To really, it's very hard for banks, very hard for incumbents. And I have followed these trends over the years. And actually only in last 2 years, 2-3 years, I have seen that incumbents are become more to think that how to switch gradually, how to start with something small, to replace it, and then take another piece, and integrate all those things together. But it's not yet there where it can be. It can look better, and I think it is probably better than in insurance business. But there is long way to go. And I have been talking a lot about why it's like that, and I think it's not only a tech thing. It's even maybe 70-80% organizational and cultural thing. How to change? Who takes responsibility? Because it's hard decision. It's as you know, financial banking. It's the serious thing, and if you break something, it costs a lot.
So the culture and the mindset is probably a big advantages of all startups. So also of all 4 panelists. Maybe I would like to talk a little bit more about the expectations of the end customer in the platform business, and I also like to talk a little bit more about who could host such a platform. I think there are always many talks about this financial super platform, comparing like what we have with Amazon in the e-commerce sector. So what's your point of view in this question, Christian? And what role could a B2B player such as Element could play in such an ecosystem?
Yeah, as I don't know, I do the B2B part. Yeah. But I'm very sure that there will be platforms, but also singular vertical players that win when it comes to the end customer. They create a trust, they have a positive perception out of whatever. They are hyped, they might be short term, they might transfer a brand or a trust or a solid business from one angle to another one. I'm just there to deliver to them so that they are enabled to work with insurance products, being that to complement an offering. So say I'm the home provider, so I might also need home insurance, even if I come from a very technical environment. Or I might do upsell because, man, that customer is fully in my hand. Why not also sell insurances to it? That's actually a lot how these conversations start, and then you normally end on that side of the spectrum. So I personally really do not know, but if we look into other countries, there will be these kind of super platforms. And if we look at the money that flows into very similar business models, it feels a bit like the 20 years ago, the Amazons or the Facebooks or so. It's just a question to bet on the right one, on who wins it. So we place our chips on a lot of them. So we have a portfolio of partners, because we of course, are only successful if our partners are successful. So we are very aligned, but we are also aligned when it doesn't work for them. Sorry, but I can't give you a prediction which platform will win.
Okay, but at least you gave us maybe a direction where it could lead to. Lawrence, do you think that, for example, the insurance industry is ready for the platform business? So we already talked about that, probably this game is decided in the back end rather than the front end. So do you think the insurance industry is ready for this?
That's a good question. So personally, I believe this is not really a technical issue. Yeah. So because you can ramp up APIs, even incumbent insurance carriers do that or start to do that. So this is not a real technical issue. I think the real problem here is what which kind of culture do you have as an organization? Which kind of people do you have? And are you really customer focused? And I think, Christian, the company you're building is something what I think the carriers of the future will be. I call them always the product factories. Yeah, that means everything which is not necessary stripped away. No marketing. Yeah, you distribute via partners, and you concentrate on bringing, let's say, easy and affordable products to platforms. Yeah, so I think that could be the future of the carrier. We don't run a carrier model because we believe in the MGA business. That means being lightweight and having not so much regulation is could be a plus, we believe. Yeah.
Every other day I envy you.
As you started to talk about regulation, that I'm so happy that I don't have a license. Okay. So, yeah, coming back to your question, Fabian, I think personally it's a transformation process, and I think the real question behind is who will operate the platforms. Are the incumbents, like the big insurance carriers, are able to build their own the platforms, or others will operate them? Yeah, and personally, I believe they would have the financial power, they would have everything to do to run their own platforms, but when I look in the past, and they ran through a different kind of industries like telco and media and so on, and everybody tried that. Tried to get to build a platform out of a product company, and the most examples I know failed, and not because they didn't have enough money. Typically they failed because they didn't have the right culture and the right people for doing so. And therefore, my personal bet, but we will see together who really wins, is that independent platform operators will win the game. But I think there's a big difference between e-commerce and finance. So I'm both banking and insurance, and this is regulation. Yeah, and the regulation somehow is good for more than one platform. So I don't agree that there will be a super platform which handles everything. I say there will be. My bet would be there will be a couple of different platforms, and they will be tailored to different target groups, and they will be tailored to different regions. And personally, I think this is good.
Okay, I see you are very, very skeptical. Looking at Wilby, I already talked about this super financial platform. I think Christian and Lawrence, they're a little bit skeptical about this one platform, but you are the enabler for these new financial home platforms, or is that also part of your business model?
Actually, what we are providing technology, and it means that we are providing, for example, one use case we are serving is that we are providing platform that provides platform to other players on the market. And I think that's very, very, very important, because I don't believe personally that there will be one winner in this platform game. And why? Because there are so many different customer segments, so many different needs on the market. And I just don't believe that there will be one winner who can cater all those needs.
Yeah, definitely. Cool. Looking at Malte, I know your business model, and I have to admit that I really like it, because you are hosting a platform.
Okay. I like it too.
Everyone seems to like it. That's cool. And because you host such a platform, and it's not led by an incumbent, and it's led by an independent player such as Xempus. Where do you see the differences? And like also coming back to the end customer, what is preferred by the end customer?
Sure. I think that's actually the critical question I'd start off with, going back to what I think Lawrence already said. I think a lot of people want to have a platform, be it incumbents or otherwise. But I think the critical question is, where can you provide most benefit to the end user? And I can't make a prediction around who might win and whether there's a super platform or something like else, although I wouldn't mind if you were it. But I think the key question is, where can users get most benefit? And really, I like to think that there are two parts to this. So the first is, assume you have lots of small and medium-sized incumbents. I think purely, and Wilver, you know this better than anyone here, the amount of investment required for them to get to the next level of tech, to have these user experiences and these processes and journeys at the state of the art is just immense. And they have multiple businesses, right? Whereas we as insurtechs or fintechs, we can just focus on certain areas and do that bit really, really well. So essentially, when a life insurer might come onto the Xempus platform, they effectively are pooling resources, right? They're getting, I know, best-in-class digital distribution for certain life insurance products, and they all of a sudden can compete with some of the biggest incumbents in the market in terms of financial resources and tech. So I think there's that component which then benefits the end customer. And then I think the second part, why I'd like to think if we were to see more and stronger platforms that are independent, it's probably because we'd like to think that a whole of market perspective is actually quite important. So what we tend to find is sort of offerings that are just specific to one particular company, one incumbent, might be less attractive to, let's say, you and I when we're trying to purchase a policy or talk about certain things. So what we'd like to think is attractive is you have a whole of market offering when it comes to buying and managing these policies. And we'd like to think one of the reasons why SMEs like us, for instance, is because with us, they can talk, or through us, they can talk to everybody, rather than having to go sort of in the specific individual ecosystems of various incumbents. So at least from that perspective, we'd like to think that more independent platform just offers more benefit to the end customer. And I think from what I've heard about what Christian, Lawrence, and Will do, it goes in a similar direction, because you can do more for the end customer if you're not tied to a single incumbent. That at least seems like the right position of the trade to be positioned on.
Yeah, cool. Thank you, Malte. I think just like when we're focusing on this question, I think we would need one more panel, or we would need more 40 minutes. Unfortunately, we just have 2 minutes left, and I would like to close this panel with one final question with hopefully a very quick answer. What's your guess on how big will be your market share, to say, in 2030 in the platform business? Maybe we start with Lawrence.
So you mean our share of business in platform?
Yeah.
I would say 100%.
Okay, that's quite optimistic.
Sorry. No. What I mean is we're doing 100% out of platform business. That doesn't mean our share of the overall platform economy will be 100%. So the other way around.
Yeah, no. That's what. I understood that correctly. Wilby, what do you think?
When we are discussing our goals and aims internally, we say that we want to be in 3 years, new era of terminals of new era. If you know terminals, that's the biggest previous generation platform. It means that I think that but the market itself is so big that there are probably many players on the market. But we try to achieve at least 10-20%, I would say.
Okay, cool. Thank you. Christian, what's your idea? What do you think?
Anything above 1 of the global insurance market would already be quite nice. So let's aim low. I really don't know.
Okay.
I would say, like Lawrence, that our share in it will be rather high, but more 10-20 years from now. I think we underestimate the speed of transformation, or we overestimate it that way. And the market is so huge. Plus, we only underwrite profitable business that cuts out a bit. Um, I really don't know, but if it's above 1%, we would be probably very happy.
Okay,
Yeah.
cool. And Malta, I think it's pretty difficult to ask you this question because you're already doing
own
100% platform business, right?
We're probably 100% platform business around the market. I mean, the European pension and life insurance market is about 800 billion euros per annum market. I think globally it's 2.5 trillion. And since we're humble and reserved, people will settle for 10% of that or so at around 250 billion. That's where we'll stop.
Okay. Cool. Cool. So thank you very much, all of you. I really have to say I learned a lot. And to sum it up, I would say we will see a lot of cooperations in the future between incumbents, between non-financial players, startups. So thank you very much. It was a pleasure moderating this panel.